The Money Show.
Investment School.
Chantal Marx now, who is the head of equity research at FNB Wealth and Investments. We're talking fear and greed in financial markets, how to navigate irrational exuberance and irrational fear. What on earth is irrational, and how do we identify what is exciting versus what is irrational, Chantal?
Well, what we are seeing right now is definitely quite irrational. So today looks a little bit better, but yesterday certainly, when you had this massive sell-off in US regional banks, that you could classify as irrational. It's absolutely crazy. So you're sitting there looking at your screen and thinking, what is happening? And the exact opposite is true when things go to the other side. When a stock or an asset class just keeps on going up and up and up, that's irrational, especially when it gets way ahead of its valuations and its earnings or common sense for that matter.
But sometimes irrationality makes sense, though, because when there is panic, everybody panics. It makes sense to panic first before everyone else catches up, before they get irrational. So do you not have to be irrational first, or irrational when it comes to a buying decision when nobody else is buying? Some people would see that as irrational. I'm just trying to get a definition of irrational.
Well, you said it. If you panic first, but you almost never panic first. I think many investors go their entire lives in markets, or many professional careers are built around markets, and they never get to panic first. So if you are going to panic, you need to panic first, but the odds are that you're going to be a few hours or a few days behind, in which case you would have missed the mark completely. And I think to answer kind of your second part of the question, isn't buying when everyone else is selling irrational? The fear is what is irrational, because it goes away from what the fundamentals are telling us. It's just panic and panic selling and panic buying if it goes to the other side. If you pull yourself towards yourself and you go back to first principles, and you are going to buy something that offers value, that has been under a lot of pressure, and that offers an opportunity, that is rational thinking. Simply clicking your buttons to buy or sell because everyone else is doing that is completely irrational.
Good point. Got you. Now I think I understand. What does fear in markets look like? I mean, in the olden days, you would get photographs of people on trading floors with their heads in their hands, shouting and screaming into phones, waving bits of paper around on trading floors. Now you've just got lonely people sitting in offices, crying into their lunchbox or whatever it is. What is that expression of fear in markets actually look like when it comes to trying to assess whether it's fear, panic, irrationality?
Yeah, when you said crying into the lunchbox, I actually wanted to kind of say something similar. It's just a single tear streaming down your face as you watch the value of your portfolio diminish. And that is what it is now. I mean, I think that it really is a lonely sort of fear. I guess if you are a professional investor and you're still office-based, or you've returned to the office, then you can see the guys who've been in the market forever lying on their arms on top of the desk. But if you are just trading for your own portfolio, you're a long-term investor with an interest in the market, what it looks like is exceptionally lonely. And it does look like things will never be okay again. And with that goes a massive sense of anxiety as well, which is why I think people make the mistake of acting on their fear and following kind of the herd mentality when it comes to panicky situations and big downturns like we've seen over the last few days.
What causes that fear? I mean, that fear, what sparks it? It feels like a little bit like a wildfire with a can of petrol. One moment there's just a little piece of news. Oh, a bank's in trouble. And suddenly there is an explosion that happens. It's terrifying.
Yeah. So what tends to happen is, the investors who panic first, obviously decide to get out of their positions. So there's pressure on the market price. Then you get a situation where everyone else is driven by loss aversion. So they sell in order to not be stuck with something that they don't want to hold because something terrible has happened or everyone else is selling. And then you have the added pressure, particularly when there's a downturn, that some will actually capitalize on the fear in the market and they will short stocks, and that will create even further downward pressure because they're selling stuff that isn't even actually for sale. It's a whole complicated thing, but they make it infinitely worse. So you see these big outsized moves on a day-to-day basis. And of course, volatility is very high. So things move in extreme amounts.
And the opposite of that is greed. And so when there's fear, there's lots of selling. Greed becomes irrational in the voraciousness of it. There is no fundamental reason to keep buying a particular asset or asset class or whatever it might be, yet everyone else is doing it. And it's the ultimate FOMO, I suppose. You better get in on the race as well.
Yes, absolutely. I actually, in my notes, I wrote FOMO in big, bold letters because it's that fear of missing out. Investors also start becoming overconfident when markets grind higher and their positions are actually working out. And then they are in a situation where perhaps their stocks or their investments have reached expensive levels or their target prices, but then every little bit of information that they look at is confirming that they are right and they're excellent and that the market will just continue going up. And what it really looks like, what I always think about when I think about irrational greed in the market, is everyone is talking about the market. Suddenly you are in the dentist chair, your mouth is wide open, you can't even respond, and your dentist is giving you stock tips.
No, but don't not my current dentist, but I once had a dentist who listens. Hello, dentist. And he would ask questions with like 8 fingers in your mouth and half of the dental equipment in your mouth while the suction thing is going, you know, that sound, and ask questions, and then you're supposed to answer. And he's the only person on earth who can actually understand your response, which I don't know. And they seem to get that. But anyway, dentists, yes, I get the point. But people get very excited. I've heard hairdressers being used as another example. When it gets to hairdressers' ears, that's when you know that things have gone pear-shaped. And again, the greed that causes it is the FOMO aspect, isn't it? It is that sort of thing is, if I don't get in now, it doesn't matter that it makes no sense to do it. It's a bit like the sort of stuff that fuels the Bitcoin frenzies that we see from time to time.
Oh yeah, absolutely. Bitcoin is a fine example of what greed looked like. I mean, at one point I was thinking to myself, am I completely nuts because I don't actually understand this asset class? I've tried my level best. I've really dug very, very deep into my maths background. Don't ask about it, Bruce, because it's very long ago. I was trying to just look for anything that made sense around it, and I couldn't find what underpinned the value. So I decided I wasn't going to get involved. But wow, as it started just moving up and up and up, I found myself thinking, what am I missing? Maybe I should just put in a few R100. Maybe I must just buy a fraction of a Bitcoin just so that I don't miss out. And it's that kind of mentality that drives greed in markets. It's not only an asset class that's kind of untested and very controversial like Bitcoin. It's anything. It really can be any stock. It can be any bond. It can be any commodity. I know that there's been irrational exuberance in gold prices, for example. PGMs, look at what the price of rhodium did a few years ago. These things happen from time to time, and we all get swept up in it because we're humans.
We are, and we're frightened, and we're greedy, and sometimes both at the same time. We're talking to Chantal Marx this evening, the head of equity research at FNB Wealth and Investments. In a moment, we'll ask her how to measure fear and greed so that you know what's irrational and not, perhaps. But we'll pick up on that in a moment.
The Money Show. Investment School.
We're with Chantal Marx this evening, head of equity research at FNB Wealth and Investments. So how do we measure fear and greed in financial markets? These things have got their own indices, don't they?
Yes, so I'm actually going to talk to you about the index, which puts together a lot of fancy stuff. Like they look at market momentum, stock price strength, stock price breadth, that's volumes, put and call options, derivatives, market volatility, safe haven demand, junk bond demand, all this stuff. Gets put together by CNN in what is called the Fear and Greed Index. And if you just Google Fear and Greed Index, it will pop up first thing. And if you pop through, it has a really nice picture as well, that kind of measures fear and greed like a speedometer does. So it puts together all these really great measures of fear and greed. And it just tells you exactly where the market is currently. So as an example, at the moment, the market is in extreme fear territory. Then
it's a 24, which is extreme. 24. It's in the red and it's down on the left-hand side, which is a place where if you are irrational, it makes sense that it's there because everyone is panicking. Is this the point where your rational brain kicks in and says, inside this catastrophe that's happening, that is making everybody else frightened, there has to be opportunity?
Absolutely. And I always go back to what Wayne McCurry, he's my colleague and one of my favorite market analysts, always says. He says when things are like this, he usually has this line, and he says financial markets have seen all manner of wars and plagues and crises, but have always recovered and then some. So when you are in a situation where there's extreme fear in the market and there's major pressure on stock prices and other asset prices, it presents with an opportunity because markets recover. They always recover. I'm not going to delve into why the Nikkei 225 hasn't necessarily recovered from the 1980s. But if you look at every other stock market globally, as well as the MSCI world, if you look at bond markets, they come back and then some. So it's very important to view periods of extreme fear as an opportunity to set aside that anxiety and to start thinking clearly and go back to the basics and look for the opportunities.
The golden rule in most things is if you are, teetering on the edge of a precipice, if you're driving your car towards an obstacle at high speed, if you are in investment markets, there is one common theme that goes there. The theme is don't panic. Because the moment you panic, you start acting irrationally. You start behaving in ways that could be destructive to your physical health or to your financial health, depending on which thing you're panicking about at that particular time. This idea of not panicking is a weird idea because it's our first instinct. You suddenly see, effectively, somebody set fire to your money, and it's going up in smoke. It's terrifying. It's horrible to watch.
Absolutely. And I think that when it comes to fear and greed, you want to say don't panic both ways, but don't panic is very relevant when investors are extremely fearful or the market is in extreme fear territory. But on the flip side, I would want to add to that golden rule, don't be complacent, because when the market is in greedy or extreme greed territory and everything's just going up and up and up and up and up, you tend to kind of almost forget for once about your portfolio. You're not looking at it every day. You're not considering what returns you've generated. You're not thinking about these things often enough and clearly enough. You're becoming complacent. So the golden rule for navigating fear and greed in the markets is A, don't panic, and B, don't be complacent.
Very important points. How then do we navigate fear and greed in the market? Because sometimes there can be greed around, and you don't want to be the first person to opt out of a market that's greedy. You want to ride greed for as long as it is sensible and safe to do so. And when there is fear in the market, you want to be fearful first, or simply sit back and watch people behave in a frenzied shark feeding session and devouring each other while you sit quietly by and saying, no, it's fine, these things will recover. How do we navigate both sides of this extreme?
So firstly, because you are trying not to panic, you need to do something that calms you down. So, whether that be go for a run, go to the gym, take a yoga class, have a glass of wine, you just need to think about things a little bit more clearly, because you are not going to be the one that panicked first. And you're not going to time the market perfectly towards the upside. So some practical tips for when you have calmed down is to firstly have profit targets in mind when investing. So particularly when you're looking at opportunistic trades, right? So I'm not talking about your, retirement savings that are in unit trust funds that have professionals looking after it, and they doing the panicking and the calming down and the opportunities and all of that. When you are looking at opportunistic trades, so when you've now taken advantage of a extremely fearful situation and you've purchased a stock at a very low level, think about when you actually want to exit this stock or this opportunity, and stick to it. You may feel like you're missing out. It's the FOMO.
Yeah, but I mean, the number of people, and I mean, one example that's not spoken about anymore because it was the go-go stock of its time before Naspers became that stock, was Famous Brands. And people were buying into Famous Brands at R6 a share and selling out at 12, feeling like a genius, buying in again at 15, selling out at 22, feeling super clever, buying in again at 32, selling out at 52. And this flippin' thing just kept on going up and up and up. They felt it was irrational. But in the background, this thing was developing and growing a huge base of value, right up until the disasters, of course, in the United Kingdom. And it's that thing of being, I don't know, when you set a level, and then you not revise your level and set a new level and a new level, and constantly keep your stop losses in the background, keeping up with your exuberance and fear.
So absolutely. And that is, I'm not a big fan of levels specifically in terms of the price. I'm thinking about more levels in terms of the valuation, because then as your earnings momentum picks up, the price adjusts upwards, and you can actually say, okay, well, I've bought this stock on a 6 price to earnings ratio, and I'm planning to get out at 10. And that 10 might only happen in 10 years' time if earnings grows at a pretty solid rate or ahead of the share price. So you always need to think about things on a relative basis as well. An absolute exit could hurt you unless it's over a very short-term period and you're very clear about what you want to achieve with that position. Another nice way to kind of hedge yourself against something like that is if you take an opportunistic trade, you've got an exit level, for example, and then take the capital, do something else with it. And if you want to run with a little bit, you can still run with your profits that you've already made out of this stock. You don't have to keep all your capital in that specific trade.
But you may lose out. Think how much you could have made had you just stuck it, etc., etc., etc. But the point is well made. Chantal Marx, thank you very, very much. Chantal Marx is the head of equities at FNB Wealth and Investment, equity research at FNB Wealth and Investments. The Fear and Greed Index. Google it. It's fascinating, actually. Just haven't looked at it for ages. Right now, red's a bad color. I think when it comes to fear, that's where Chantal's looking at this evening, looking for opportunities in the chaos.